Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So you can see the situation in the euro current stands different compared to our trading plan that we discussed. And actually, euro has fell as a victim of the unfriendly statistics that it's got. So if you know, yesterday it was the ZEW report showing the bad sentiment in May and June. And another important data shows that the demand for the German goods has dropped significantly in May, so even outside of the European Union, and that really makes the overall recovery in the European Union doubtful, and that significantly hurt the sentiment in the market, and so led to drop in the euro currency. So it seems that currently we do not have on the table anymore the 120 area, although it was looking really great, and we would like to see market around 120 because it could provide us the perfect entry opportunity. But currently it seems that it's not the case anymore, and we need to take a look what's going on currently and make the decision what we could do in the current situation. So speaking about the daily chart, here market from the one point of view doesn't show yet some real straightforward downside acceleration. At the same time, it shows very weak reaction on the patterns and actually on the levels that we have. Theoretically, you could even get here some divergence on the MACD. If you plant the MACD here, you will see the divergence. But actually, this is, guys, the only bullish moment that we have. And I wouldn't count on this divergence too much here just because it stands in the free space. Market not at the support, not at the result. It's just free area. This market already has broken major 618 support daily chart. And the divergence in such situations are very tricky, so not very reliable pattern. But except the divergence, we have nothing. You could argue that we could here could get some kind of the wedge, falling wedge, the potentially bullish pattern, but with the sell-off that we have here, the wedge pattern also might become just a continuation. The market shows the acceleration below it. So usually when the market breaks the wedge pattern in opposite direction, so because traders habit that the pattern usually reversal, it shows indication of the weakening of the bearish pressure. It's becoming weaker, but it is only in the classical school. In the modern market, very often the wedge becomes really the patterns that in the case of the continuation leads to even stronger downside acceleration. So with the first grabber here 2 days ago, yesterday, and this is also the bearish reversal candle, you can see market creating a new top and then collapsed. So I wouldn't count currently on a significant upward bounce, even because we have the MACD divergence, something of that sort. It seems currently that we could get another downside continuation, at least to the 1770 area. Theoretically, we could suggest that maybe this will be some kind of a free drive pattern. This could be the first drive, second, the third drive will be around 1770, 1760, and then theoretically maybe market will show some bounce if the pattern will work. But what I would say currently that for me, it's chances to see another leg down looks better than current reversal right at this point. Although you probably saw this many times in the market, some kind of a double bottom with a bit deeper second bottom, and the divergence very often leads to upward action. But in the current circumstances, I do not want to make the bet and make trade on this setup. Besides, if you will take a look at the other forex markets, for instance on the cable, you will see that it has absolutely the same setup. We have the same grabber, we have the same reversal candle. But these grabbers, take a look, it stands far from the lows, and they should be taken out. If cable will go lower, It's also some kind of the free drive pattern maybe. It means that on the euro currency, it also could happen that euro also should show some another swing down, despite it's already mostly stands near the previous bottom. So this is another reason. This parallel analysis makes me think that well, if you would like to take the long position, it would be better to wait and see what will happen. Currently, it's a bit too much risk for taking the position, because in general, guys, on the daily chart, we are waiting for the 1650 area. We are waiting for downside continuation right down to the ABCD target. Additionally, if we'll take a look on the market mechanics on the intraday charts, recall that this bounce actually the COP target of the same ABCD pattern. The COP reaction already is done. Now theoretical market stands in the downside continuation of the major swing, and it should proceed lower to the OP. Speaking about the hand and shoulders that we discussed previously, could we said that it's definitely will not happen. Not yet, just because market stands near the bottom of the head, and euro currency keeps theoretical chances to show the hand and shoulders. If it somehow it stands here, for instance, if we will see something in today's Fed minutes publication that support euro, or better to say, will weaken a bit United States dollar, the market will be able to show some recovery. Maybe this happened, but I treat these chances only as theoretical. Because of the COP, as I said, and take a look at the reaction here. Well, market, although it's on the first glance, the action is bullish. You could see the double bottom with the divergence. But what the type of action stands here? Usually after such action, if it's really bullish, market shows the straightforward and fast upward recovery. But here, market stands below these lows. So it has broken it down, trying to return back, failed, return it back down. So this is not very bullish. So by this possible reversal pattern, maybe it could work, maybe it will form, but I treat this chance only as theoretical, just because market hasn't broken yet the lows. More chances, I think, could happen with the free drive if any bullish pattern will be formed around 1770. It's more probable pattern in the current circumstances rather than head and shoulders. Although, guys, I also think that it's really a big chance that we just get the straight downward action. No free drives will be formed, but at least what we do know currently, I would count on another swing down before considering and taking the long position. Speaking about hourly chart, what we have? Another reasons here to be worried about the bullish context. First of all, ABCD pattern is erased now, so market dropped below the C point. And take a look what has happened. Market already was standing in upward action to the XOP. We even talked about 1910, thinking about taking position, not taking position here. And it was broken on the halfway to the target. It means that this not natural reversal. So I mean, not the technical, it's driven not by the technical factors. This is external impact, which was the data release. And this is just crushed and break of the bones of the bullish context. So this collapsed down. For me, currently, theoretically, it is possible to consider probably short taking of the short position, because market already has been formed. As you can see, got is cheaper to sell here, dropping lower. In the current circumstances, I would consider as the signal line somewhere around 1850. It is important level. First of all, this is previous lows, and market currently stands below it, can't return it back up. And also it is important from the point of this overall downside action. If this is real bearish reversal, market should not return back significantly, so at least it should stay below 1861 fib level. So if you consider taking the short position, you could try to maybe considering this with the stop placing either above the grabber top if your funds let you to do this, or at least above the 618 level. Because if market really is turning on the bearish way, it will not return it back up and not starting the new upward action here. If this will happen, it means that we are turning back to this pattern, and maybe it will get chance to be formed. But in the current circumstances, guys, I really think that the chances for that are not really significant. So here's a bit tricky situation in the euro currency, but that's actually what we have, and we have to deal with the background that the market provides us.